Alrighty. Thanks everyone for tuning in. This is an episode that I'm personally extremely excited about. I'm here with an old friend and one of, I think, the most successful founders in DeFi, Stani. I think he needs no introduction. Founder of Aave, founder of Avara. And yeah, today we're going to talk about lending markets, the evolution of Aave V4 in particular, and yeah, how will this whole space, DeFi, but more particularly lending and borrowing, evolve over the next couple of years. But yeah, hey, thanks, Danny, for coming in.
Thanks for having me. And we go way long back. I think it was it 2018 or 2019 when we actually met, and you were showing me a really interesting way to do interest rate swap on back when we were building ETH which was a predecessor for Aave. And it was like I think you were the first builder on ETH basically.
Yeah. Yeah, I remember it was ETH Paris, I think, the
ETH Paris
hackathon.
hackathon, yeah, ETH Global, yeah.
And funnily enough, it was right after ECC
Yeah.
in Paris back then. And today, in case you haven't realized, we are at the ECC in Cannes.
Yeah.
So yeah, it's funny to
And
go
I,
full
I
circle.
remember it really well because when you came to chat about how to do this implementation, you had a sweater that said Lehman Brothers
Yeah.
here. So I never forget that.
Yeah, that was good old times. Yeah, I think the hack was actually an interest rate swap between the fixed rate ETH protocol back then, and
Yes.
then a MakerDAO that just launched and had variable rates. And I think this is actually a good segue into my first question that I want to ask you, which is Aave, of course, came a long way. We started back then as ETH
Mhm.
you actually started out with sort of fixed rate lending back then, right?
Yes. 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 Yes.
And yeah, of course, it evolved quite a bit. And funnily enough, like now with Aave V4 on the horizon, I think we see a new sort of emergence of fixed rate
Hmm.
lending as well coming out, slowly but surely.
Hmm.
So yeah, maybe in your own words, like how have you seen as the founder, like the evolution of like Aave and of course the evolution of like lending, borrowing in general in DeFi
Hmm.
since you started, and like what were like the interesting sort of like points along the journey
Hmm.
that you still remember?
I mean, when we started back in 2016 and 2017, one obviously challenge was that there wasn't any lending infrastructure on chain, and we started to build um, basically the first one, which was ETHLend, and that model was more of a peer-to-peer model compared to a lot of the pooled models today, like the Aave protocol, um, and something that was really limited is that you can only had crypto assets and certain type of crypto assets, and they were very low on liquidity. I mean, this was the year when ICO started to came. Most of the liquidity um, in assets were primarily in ETH and Bitcoin, and these traditional assets. There wasn't any stable coins on Ethereum, so you have to figure out like how if you want to give certainty on the borrowing rates. We had this kind of like a model where you borrow let's say 1,000 USD worth of ETH, and then whenever your loan ends, the duration ends, you return 1,000 USD worth of ETH and the interest essentially. So at that environment, we were using primarily on-chain tokens as a collateral to borrowing ETH, but then you could do the vice versa as well. So um, what we realized is that we created first a kind of I would say like a loan request type of marketplace where you could create a small smart contract wallet, set yourself the parameters you want to lend out on chain, and then anyone can go and fund that request, and it has a duration. It has also liquidations and other types of features down the line that we added, and then we added the other side of the market of loan offers, and it actually picked quite decent traction, up to 5 million worth of TVL. TVL was a kind of like a I would say like a metric that was evolving at that time. And then we saw a lot of actually interesting innovation around the pooling. And I think at the same time, what happened is that stable coins came into existing into Ethereum. MakerDAOs die uh, uh, back then as an example. So it was an easy way to actually create stability as well. And in Uniswap, bringing the idea of like a pooling assets together and forming a pool. And I found that that's really a fascinating model because you get network effects of liquidity that you can withdraw funds and whatnot. And we saw, for example, compound coming on the lending side. And we wanted to basically continue with this innovation and move to a pooled model. And it was 2020 January, 8th of January, I remember exactly, where we launched the first version of Aave protocol. And it became quite success, especially because we had this concept of flash loans. So you could just borrow any amount of liquidity that was available in the pools without any collateral, but just for one Ethereum block. And that just gave like a lot of ideas for developers to actually innovate, create different kinds of swaps, arbitrage opportunities, and also use flash loans to liquidations. There were also like few protocols that were used to exploit with flash loans, but that also like became less of a less popular down the line.
And I imagine this still the timing where like Compound came out, right? And then
Mhm.
you actually shared the paper with me back then after the hackathon, and I was like, okay, wow, they're moving into like this
Mhm.
spooled model, which I think made a ton of sense. And I remember Compound was extremely limited in the number of tokens and assets you can actually use
Yes.
as collateral and borrow
Yeah.
and lend, right? And I think they didn't even have USDT, and back then
Oh
already
yeah.
like USDT gained a lot of adoption, right? And I
Yeah.
think sort of like, how did you see this? Like from me, like adding a bit more variety of the assets
Yeah.
that you can actually borrow from, I think was one of the killer features you guys had at the beginning that sort of started that momentum.
Yeah, I think everyone kind of underestimated the speed that how quickly liquidity was building up on chain, but also for a lot of these assets, even off chain. And I think one of the kind of like a challenges is that when you move from peer to peer model to a pooled model, um, you still have to kind of like think about risk profiles and analyze these assets carefully before you list. And we made a lot of analysis and we realized that there's actually quite a lot of assets that are they have similar type of a risk profile. So for example, when it comes to stable coins, we understood that USDT was actually much more widely distributed than any other stable coin, and there was more of like I would say kind of like a social consensus that it could be used as an asset. And I was kind of like shocked that none of these other protocols were actually even listing it as a borrowable asset because that's less riskier. So we did that and listed it as a borrowable asset, but also we expanded on the risk curve and adding assets that were highly liquid, but more of like a community tokens, like Link as an example, and a few other ones. So that was like a way for us to satisfy market share that didn't really kind of like didn't have a service, and we were able to expand the DeFi user base. So you just couldn't necessarily like you were able to already unlock capital from your ETH, but then all these other assets remained kind of like underserved. And then we started to look into wrappers like WBTC, a way to bring kind of Bitcoin-backed loans into Ethereum. And the time, actually, I want to say something about also the timing because I feel like every financial application that is successful has some sort of ideal macro conditions. And back in 2020, that was when COVID hit. And I remember participating in the ETH London hackathon. And actually, just after we launched the Aave protocol, and saw a lot of innovation there. And when we went to Paris later to ETC and right after that, there was waves of lockdowns again, and what actually happened is that people had more time to spend online and do all kinds of things and think about their finances and earnings. And the macro conditions, for example, were so that all the interest rates were pretty much at zero at that point. So being able to get 2-3% even on in DeFi was really attractive
Yeah.
when at the same time the economy wasn't moving. So the more technical advanced users found DeFi and started to use that. So that was like a really interesting, like a macroeconomical an environment that not of DeFi builders in the space think about, but I think it has some effect.
Yeah. And so basically what happened is you started out with this more peer-to-peer fixed rate lending approach, right? Which I think if I draw kind of like a parallel to, let's say, the trading world, like for me it's like on chain, what is interesting is really like the trading and the borrowing and lending. These are kind of like the core puzzle pieces. And of course with Arrakis we are very much focused on like the trading and on-chain liquidity side.
Hmm.
And like how things started on chain were also like Ether Delta and so forth,
Oh
which
yeah,
was like this sort of like
legendary.
order book, which is also sort of like, hey, everyone places their orders, right? And then you match
Yeah.
against someone else, or what was it, like air swap or something, these OTC
Oh yeah.
protocols, right? Like, hey, again, like peer-to-peer, sort of like
Yeah.
you match me, I match you. And I think what happened is that DeFi was just so small that these peer-to-peer protocols at that time just weren't able to scale well, right? It
Yeah.
was too complicated. It like required sophisticated, you had to be a sophisticated financial actor to actually
Yeah.
operate them, right? And make sure to set risk parameters and prices accurately. You have to write backend servers to automate stuff.
Yes.
And then I think the innovation with like Uniswap also innovated this like pooled model, right? And Compound came in
Hmm.
and also came in, you guys. And now it was just way easier for regular folks to have the sort of parameters be abstracted, and they just have this
Hmm.
like one size fits all solution that they can enter and exit from. I mean, interact with like a pooled liquidity pool like Uniswap, or like you guys what you get
Hmm.
build with Aave. And I think now I'm like maybe transitioning the conversation into today, right? Like
Hmm.
I think what we're seeing today is like the going sort of like a bit back to this more custom way of doing it. So
Hmm.
the pooled way is still like the foundational part, but on top of this, you can do way more sort of individual peer-to-peer custom things again, right? Like with Uniswap V3, V4, where it's like, hey, now sophisticated actors like Arrakis can come in and run strategies that
Hmm.
are because they have the tools and the know-how to do it, and you as a user can then use it. Or even in lending markets, right, borrowing markets, you can now do way more sort of individual custom things if you like. But yeah, I think this is a good segue into of course we skipped a couple of things, right, but into Aave V4 and so forth, and like where
Hmm.
we are today and how you maybe see and it would be great to hear how you articulate the transition from like the old Aave and then
Hmm.
to now V4. What is the
Yeah,
direction?
I think over all these generations of Aave protocols from V1 to V2 to V3, we always had some sort of cumulative innovation that we added, and we try to always be very innovation driven. So I think whenever we're already building something for the future, we're trying to think a little bit ahead and think about like what kind of use cases that might be, and adding primitives that create opportunities and can be useful for developers. Um, so that kind of like a philosophy is still sticking quite hard. And with the V1 to V3, there's different kinds of innovations from like credit delegation, which we still want to see people to build. Um, Handling like a cross-chain interactions more better through a directly through a lending protocol, um, and a lot of this cumulative innovation. And there's always like some sort of a feature that really drives a lot of traffic and organic growth. And I think for Aave V4, it was the eModes, and eModes.
Oh, V3, right? I
Sorry,
mean,
yeah,
yeah.
so many versions.
Yeah.
But in V3, what's interesting about eMode is that typically risk parameters were very conservative, and we introduced the ability, basically setting the risk parameters for correlated assets to correspond each other. So if you're borrowing one stable coin and you want to get the highest utility, you should be able to borrow almost the full value, 899 loan to value ratio, because that might be your strategy at that moment. So when we launched the Aave V3, we got a lot of migrations just because of that particular feature. Now, Aave V3 has been the most successful implementation of lending protocols. It's the most trusted protocol at the moment, and deployed across 12 different networks. There's great risk management done within the Aave community. A few months ago, when the market was going down, we liquidated over 200 million worth of collateral across 12 different networks of 43 billion net deposits. So it really shows that DeFi can be resilient, and this is like the future. And if you go even back in time, so when we started ETHland, we had a lot of competition, but all that competition was actually more off chain. So we had centralized kind of like a lenders like Salt Lending, if you remember, BlockFi, Celsius, OTC desks like Genesis, and they were running billions and billions of worth of loan books at that time. And none of these companies really survived over the market turbulence. In fact, they were using Aave in the back end. So it just showcases that if you build on a transparent system, let everyone to kind of like contribute and express an opinion, um, it turns out that you create a better system. So for we're happy with the progress of V3, but a couple of years ago we were trying to think about with my SVP of engineering, Emilio, who you know really well, how basically the technology that we build will also fit to the traditional world, and how it can be agnostic to crypto native assets, to traditional assets, and also any innovation that comes from the community. And then we came up with this new architecture of liquidity hubs and liquidity spokes. So what we like about DeFi is that if you give enough space to innovate, you will see a lot of interesting initiatives. Not every one of them will scale necessarily, but it gives ideas to progress to the next potential innovation. So one thing we really wanted to avoid is to segregate liquidity. So one reason why Aave has been growing significantly is you have a one entry point market. It means that when you go to Aave, you have a very curated risk profile, and you basically trust that risk assessment. It's the typical assets that people see. There's isolation on or tail end assets, and borrowing caps and so forth. So it's a very like a particular risk profile that is catered for the kind of like a main user base in DeFi, and that's why it scales really well. So we see also demand of creating tailored risk profiles, or being able to basically position yourselves on the risk curve. And we do that with the Aave V3 as of today by creating new markets. And we see this activity happening in other lending protocols. And the biggest challenge we actually see is that when you start creating risk profiles and segregate assets, you quite easily also start fractionalizing liquidity. So we were trying to understand and solve how you can actually keep the scale that Aave has, and the liquidity in one place, but at the same time, you enable just this innovation to happen in different risk profiles and configurations. And we kind of came up with this model of liquidity hubs and liquidity spokes. So liquidity hubs are where the assets are stored, and users always enter from a spoke. And spoke is essentially a borrowing strategy or borrowing configuration. So the liquidity hub can actually give credit line to each spoke. So the main core one probably will have the biggest credit line, so the borrowers can access to most of the liquidity. But then if Arrakis, for example, builds something interesting and new and wants to tap into liquidity, they will get a credit line from the main liquidity hub. And obviously, what this solves is the two problems that lending protocols have is that when they create a new risk profile, they need to either incentivize with rewards or contract the liquidity and rent it out for a period of time. And obviously that comes with a cost and overhead. Whereas here you get direct access to the liquidity. And these hubs can be governed by the Aave DAO, or they can be also governed by individuals or completely immutable as well.
So for this hub and spoke architecture, how do you see the how do you see the difference between the Aave DAO and then the protocol? So the protocol, I think, is the sort of like hub and spoke architecture where you can have
Hmm.
multiple hubs come in. A hub could be
Yeah,
potentially like BlackRock or something,
yeah.
right? Or
BlackRock, JPM, Hub
yeah,
as an example.
anyone can become like a hub and start allocating to spokes. The spokes are where the innovation happen, where like
Yeah,
companies like Arrakis come in or other people, Gauntlet or
yeah.
whoever, and start creating strategies. Do you see then is sort of then the Aave so like DAO or who is I guess right now so like so in control of this liquidity? Is it sort of like is it becoming the main hub? And do you see its role sort of shifting a bit to like a capital allocator,
Hmm.
so credit underwriter sort of?
Yeah,
Yeah.
yeah. That's a, like an interesting question, and I don't actually know the exact answer. That's an interesting question, and I don't have the exact answer specifically because there's different ways to go about it. I do think that a really good comparison is a thinking about banking. So, for example, the liquidity hubs can act as, for example, central banks, and then the spokes are commercial banks. So the central banks basically just allocate um, liquidity into different types of initiatives based on risk assessment, and then the spokes have the access to that liquidity. So there is that capital allocation element on the like governor aspect, for example, the Aave DAO and the risk managers. Um, so I do think that's one path to think about it, and the other path obviously is the user experience level. So obviously the hub and spoke architecture is deep down on the architecture, which can be then used either this way or completely. You can take the whole architecture, put some permissioning as well, and use in an institutional use case for example, custom interest rate strategies like fixed loans, for example. And you can build a layer of capital allocation for the users on top. So there's two ways to think about it: is that you either basically rely on the Aave DAO to provide, let's say, the most conservative or more like a curated um, capital allocation, or at the same time you can control yourself or build a layer there where you have individual capital allocators allocating between these liquidity hubs actually and pool and spokes.
Okay, cool. And so just like going into the different parties, so you got like borrowers and lenders,
Hmm.
obviously, in such a market, and of course maybe like new parties emerging as well.
Hmm.
Um, but for me as a lender, right? You say you enter via a spoke
Yes.
by depositing the collateral, and other always the collateral is used as
Yeah.
to be lent out, right? Which is I think a very great feature. So the rates that I receive as a lender, will there be now multiple, so like based on the spokes, will there be like multiple sort of rates that I receive, or let's say you have 10 different hubs, sorry, 10 different spokes, and then the other DAO like hub, all right, that provides the credit lines.
Yeah.
Do you then have as a lender like the one sort of rate that Aave gives you, and it's kind of like basically so like this average or something of all the different rates that are received, or is it specific for each spoke?
Well, from the kind of like a user level, you always you enter through a spoke, but the rate is determined by the liquidity hub.
Okay.
So the core liquidity hub might be the most conservative one, allocating, let's say, Ethereum based collaterals, wrapped ETH, wrapped Bitcoin, CBBTC, and so forth. Then you have another, and then you have like the spokes that are this types of collateral, and you might have actually another liquidity hub that could be, for example, a Ethena strategy where you can use SUSD as a collateral to borrow stables and leverage that strategy as a hub and a spoke. And the magic is it happens here that you can, as a user, allocate liquidity to that liquidity hub with a higher um, uh, return. But at the same time, that spoke can be connected to the core liquidity hub. So the core liquidity hub can give a little allocation, let's say 100 million, into the spoke.
Mhm.
So you can enhance the risk across all the liquidity hubs and cap it to certain amounts. And why this is interesting is that you can tailor the risk across all these hubs essentially. So you can choose that if you want to supply to the least riskiest, but there's some upside of that type of a risk, or you go directly to the highest yield by getting direct exposure to that strategy. Um, and also specialized strategies as well. So if Arrakis creates some sort of interesting trading strategy, that can be its own liquidity hub. But if the core liquidity hub realizes that this strategy actually is less riskier than we were thinking about, or it scales, they can start allocating liquidity there. And I think this is a key component that now you can actually scale a strategy, because as it takes more traction, it gets connectivity across the whole the set of hubs, basically.
Okay. So basically, I like as a default, you let's say you have 10 spokes and the Aave main hub. By default, you always as a lender just go to the Aave hub. You lend your assets out.
Yes.
It determines the rate. And it's basically how it works today, right? But
Yeah.
now this protocol is more modular in a sense that new hubs can arise. Arrakis, we can come in, create our own hub, define
yeah.
our own risk parameters
Yes,
in
on
there,
Spoke.
which might be and Spoke, of course, where the strategy runs, but
Yeah.
then the hub where basically the rates are determined, right?
Yeah.
And maybe we can set things a bit more risky, or we have a certain way of thinking about it, and then
Yes.
the users can decide for themselves where they
Yeah.
want to enter. But the strategies themselves can get credit from both of these.
Exactly. And the idea there is that getting access to liquidity. So we see that developers struggle with liquidity network effects, because a lot of liquidity goes into Aave, and it's very concentrated. And then we see all these schemes of like renting liquidity that become expensive, and the liquidity leaves after that, when the maturity hits on these incentives essentially. So what we want to solve is that if you have any type of innovation, you can come to Aave, create a spoke and a hub, and get direct users and to allocate to that hub. But at the same time, as that strategy gets battle tested and gets more traction, then the other hubs can actually start allocating. So the core hub maybe allocates less than the more riskier hub. And one interesting feature we also added, which is quite unique, is risk premiums. So basically, typically when you borrow an asset on the Aave V3 or other lending protocols, you pay the same price regardless of your collateral composition. So in V4, it's now possible to actually create an interest rate based on the risk that you are actually creating as an individual user. So you always have a base rate on the least riskiest asset, for example, for ETH, and then every asset kind of creates you. There's an algorithm that creates you a risk premium based on the collateral composition and how risky it is towards the protocol. And that gives you the basically final rate. So what we're trying to solve here is that if you have the least riskiest position, you shouldn't be paying the tail end risk of a lending market, for example. And at the same time, if you are on that tail end risk profile, you should be able to be priced accordingly to that. So you get rid of this kind of like a free riding problem, and it means that within the same kind of um, liquidity hub and spoke combination, you don't have this free ride problem, because you can go to a hub and pay the least amount of interest on your borrowing if you don't add that additional risk. And that's really good for borrowers that are creating very low risk positions and get access to cheap liquidity.
And also good for the DAO, right? Because it actually
Yeah.
prices the risk of the assets
Yes.
and the borrowers.
Our kind of thesis is that if we can make borrowing cheaper or price it more accurately, we get more borrowers. That's the idea.
And so basically, just like comparing maybe to like other protocols out there, it's you can anyone can come in and create markets, right? Anyone can come in and define their own risk parameters.
Yeah.
Of, let's say, how they want to configure the rep BTC market.
Yes.
Or whatnot, right? The Aave DAO will be there as like the blue chip one,
Yeah, exactly.
as everyone's like sort of like comfortable with. And I can come in and actually like I can come in as like a strategist and actually create a strategy that
Yeah.
then requests money from these sort of like hubs.
Yeah.
Could you so yeah, and the hubs are sort of like the markets, right?
Yeah.
Um, and they act as capital allocators at the same time. They're
Yeah,
kind they are
exactly. So basically, hubs are effectively the final rate that you're getting
yeah.
for supplying liquidity there, and obviously, like with Aave V3, you can create markets, you can use the infrastructure, but the bottleneck for V3 and other lending protocols is how you keep the concentration of liquidity and avoid fragmentation while introducing these different markets. So we're kind of also moving away from the concept of markets because you have hubs and spokes now from like an architecture perspective. So what I think will happen is that we probably will see like maybe a dozen or a couple of dozen liquidity hubs, and then we might see maybe like 6 to dozen spokes in a liquidity hub, and per liquidity hub, and you will see spokes that are connected to multiple. And then we probably will see a capital allocation layer built on top of the hubs. So, for example, allocating between a form of like a curator, allocating, let's say, from the main to some other hubs, and kind of like a balance in between the risk and reward.
Makes total sense. I think I would love to go even deeper into this, but I think we are sort of running out of time. So I've got a final question for you. This is, I think, more like looking ahead to DeFi. Of course, we went through the evolution of from Ether to where we are today. I mentioned that things are getting more custom again. Things are
Hmm.
getting more individual, and not only for trading on chain, but for lending, borrowing. Yeah, how do you see this space evolving? Like, if you look ahead in like the next 2 years or something,
Hmm.
where would you see lending, borrowing, in particular, probably Aave? Like,
Hmm.
how like where would it move towards? And what are the big trends you think will drive growth in both borrowing and lending demand?
I think a lot of growth will also come from like these traditional assets that have a lot of liquidity off chain, less liquidity on chain, and are permissioned. So that's what we're working with the Horizon initiative. So we're launching a Aave market where basically you have permission assets starting from money market funds and going up to the risk curve and down the volatility as well in the future. And that can be converted down the line also to a V4 spoke. So I think at some point these more traditional assets will, I would think that stablecoins will at some point outgrow the native crypto assets, and then these more kind of traditional tokenized assets will outgrow the stablecoins and the crypto native assets. And I think that's why it's been important for us to design a kind of like a really good version of Aave that fits the native crypto use cases that I'm really passionate about and our whole team, but also at the same time cater the traditional use cases where a lot of liquidity will come and use cases. And I think collateralization and lending is the best use case on chain and for these traditional assets, and we can offer something really better than the traditional banks, and offer speed and transparency. And I think also RWAs and actually stablecoins will be really key because it's the only way to access DeFi yield, and especially in the Western world, where if you live in US or in Europe, we have really good banking rails and we have kind of like great payment rails. So I think yield is going to be like the main driver for stablecoin adoption as well.
And would you say with this new with Aave V4, do you open up the sort of like Aave protocol, which was for me always like for now, like you had Aave being like the main hub and the curator, right, of everything, and
Mhm.
so like the risk. Of course, you had different risk teams, but like under the Aave
Mhm.
DAO umbrella, like I see it a bit more like Aave opening up the protocol
Yeah,
and allowing, I don't know, big financial institutions to come in
yeah,
and now go in and say like, hey, I want to create my own markets and I want
yeah.
to use the underlying protocol and the technology that is basically proven to then access the same strategies, the same opportunities that like the
Hmm.
Aave DAO does, and basically co-allocate capital or
Yeah.
like, yep.
Because I mean, we've done some of the institutional customizations. We did the JPM JP Morgan's Project Guardian, where we created kind of like a permission version of the Aave V3 on a permissionless. It was the first kind of like a bank type of initiative on permissionless network. We did the Aave Arc 2.0 before the FTX happened, and we got a lot of participation there as well. And I think that the customization is now easier. So it's all doable with V3, but what we V4 makes it much easier is because it comes all out of the box. So you have an easy way to actually deploy these hubs and spokes and add your configurations, figure out your pricing models for price feeds, and essentially add also different kinds of hooks. Like if you need to add whitelisting or some sort of KYC attestation, you can do that. So you can have completely siloed kind of like an institutional hub and spoke that then over time you can make it permissionless when the time comes for
Yeah,
that.
I think that's super powerful. I think we see a big trend of big institutions, the Coinbases, the BlackRocks coming on chain. I think they
Yes.
want to have control, right?
Yeah.
But they want to use the best open source, proven, secure technologies. And I
Yeah.
think if you can sort of retain them in your ecosystem, build the rails for them, I think there's a lot of opportunities for
Exactly.
cross pollination of liquidity allocation.
Exactly, and I'm really excited about that. So there's a lot of that CeFi fintechs and TradFi coming on chain. I'm really excited about that, and I'm truly excited about all these native use cases and servicing developers because I think there's a new wave of DeFi developers here. We hosted the DeFi Summer Day yesterday, and I talked to a lot of DeFi developers that just came into the space and want to build things or have built something, and they all kind of like express the same problem is that they built something really cool and I think they built something really cool, but they don't have the access to the liquidity. And I think that with this setup, it's going to be a game changer for a lot of these developers.
Yeah, 100%. Well, I think we are at time. I think I'm super excited about Aave V4 coming out. I hope it comes out soon. We will definitely chat
Yeah,
about
definitely.
how we can work together on this. And yeah, so of course, you know where to find Stani on Twitter. Aave V4, you'll probably sort of announce when it will be released.
Yeah, quite
Got a
actually
rough
soon.
time or
We're fully feature complete, so we have a internal devnet, and we're gonna release external devnet in the next couple of weeks.
cool. Nice. So coming soon, TM.
Yeah,
But yeah, thanks, Stani, for coming here. Was a pleasure to chat with you as always.
thank you so much.
And yeah, all the best.
Thank you so much.